Thank you. Thank you, Leon, for inviting me today. I'm really pleased to be back. I was invited last year, and I'm really pleased to see how this event is really shaping up and attracting a lot of interest. And also congratulations for launching the observatory. I mean, it's a lot of work. I think this is really something that is needed in this community because there's a lot of information spread out, and it's important to have everything in one single place, accessible, free of charge, and public. So kudos to you and the team for achieving this already, and we're expecting more to come in this initiative. So I've been invited today to just give you a few, opening remarks in terms of what the Gates Foundation is doing in the field of digital financial services and financial inclusion. So I will spend really a few slides about our activities and what we see happening. So for those who are not very familiar with the Gates Foundation, this is basically the number of programs and initiatives that we have. I'm part of the Financial Services for the Poor. As the name indicates, we are really trying to promote financial access to the unbanked around the world in developing countries. But it's one of 24, 26 initiatives. We are in the global development pillar of the Gates Foundation. Probably most of you know the foundation for the activities in the health sector. Why are we also doing financial inclusion? Well, simply because the foundation is really like trying to help poor people or poor household to really live a healthy and productive life. So most of the funds that the foundation deploy are spent in health programs. So TBC, malaria, HIV, tuberculosis, polio. So these are the probably very mediatic and highly covered campaigns that we launch. But financial inclusion is probably less known and more known in this community than outside. And the reason why we focus on this project is because we think it's the underlying tissue. So if you once address all the health issues and the major disease, you need to be able also to access the right financial tools to lift yourself out of poverty and remain out of poverty. What is the problem? And you will see this is a very simple slide deck. I mean, I'm using very simple icon. I'm really moving into a minimalistic style. So, red code means that's a problem. And then you will see green code, that's the solution. So that's the kind of like a color code kind of slides. 2 billion is the target population. So according to the Global Findex, which is the last survey that the World Bank published last year, the most comprehensive analysis of the unbanked and those who have problem having access to financial services, 2 billion people are currently excluded around the world. And that's our target and the target of all our partners, the World Bank, the CGAP, the IMF, those who are really working in this field. And how are they distributed? Well, 73% are in 25 countries. And if you count India, China, Indonesia, and Pakistan, it's already 43%. So these are really huge countries with a big exposure in terms of financial exclusion. Being poor is not a static condition. It's really a dynamic process. So you move out of poverty, you fall back in poverty, depending on whether you are able to access financial tools, depending on your health situation. So it's really a dynamic process. And according to some World Bank research, over a period of 3 to 10 years, there's a 30%, 10 to 30% of households that move out of poverty. But the net effect is almost equal because there's equal amount of households that fall back into poverty. And this is important. Why we have this slide here is because having access to the right financial tools at the right moment can make the difference, particularly if you have a shock in your life, like a disease or a funeral, but also positive events like the birth of a child or a wedding make really a difference and can really push a household into poverty. When we talk about financial exclusion, we talk a lot about this, and this is cash. So the problem is that when there's a huge amount of studies and research that try to analyze the financial activities of the unbanked, to those who really don't have access to financial services. And we realize that they transact in cash. So cash is king everywhere, also in a number of most developed countries. And of course, for us, we know as we are practitioners, we are financial experts, that cash is not free. Cash is a risky asset, can be stolen, can be destroyed, and has a price tag because storing cash and transporting cash, of course, is not for free. But in the public opinion, maybe it is free. Certainly has the two advantages. It's very fast and it's anonymous. Green light. So what is the solution? This one. So mobile devices. In 2011, the Financial Services for the Poor team changed the strategy. For the first 5 years of our history, we focused on savings. So we really tried to promote savings around the world with investment in more than 60 countries, and little really opportunities for us to follow up and create a momentum in all these countries where we make a grant or invested. So in 2011, we decided, how can we really make an impact? How can we go deep? And how do we really understand the problem? Do we really understand the reality that we are trying to address? So with the help of researchers, consultants, partners, we finally developed a new theory of change and a new strategy, focusing really on mobile technologies and ICT, information and communication technologies, and how mobile devices can be used to bring financial services at the doorstep of the poor. So why digital? Because there's a number of advantages. We have another series of studies. I mean, there's plenty of reports out there for everything you need. But one study, a set of studies really show that when you move to digital, moving from cash to digital, the cost of the transaction can be really significantly reduced. We did a study ourselves together with McKinsey, and we show that a payment transaction can be 90% much more cost-effective if it's digital rather than in cash. Of course, it can increase security because all of a sudden you don't need to store or move cash. You don't need to store it under the mattress. The chances that you will be robbed are much more limited. And so there's an increased security. Location independence, simply because the fact that you are poor doesn't necessarily mean that you don't have access to a mobile device. And actually more than 1.7 billion people have the opportunity to really access a SIM card or multiple SIM cards, as it's the case in developing countries. So instead of walking 5 kilometers, 10 kilometers, 20 kilometers to access a branch, you can have access to your bank account and consult your balance or transfer money from your house. And that's really the great innovation and the great facility that is offered by mobile devices. Greater transparency, simply because now if we move from a cash-intensive to a cash-light society, all these transactions become traceable and trackable. And so there's much increased transparency. If you think about all the direct debit, the conditional cash transfer or the social subsidies that are transferred to poor households, like billions of people receive funds from the government for food, for fuel, for electricity. Most of these funds are delivered in cash, with a huge amount of money leaked and possibility for corruption. So digital technology has the advantage of making all this much more lean, efficient, transparent, and traceable. And of course, it's a mine of data that can be used to create algorithms to understand better behaviors and really create new products. So, for example, if you think about loans, microloans, this product like Mshwari in Kenya, now exported in Tanzania, you don't need to have a credit scoring, traditional credit scoring, to be eligible for a microloan of $20, $30 that can help you in your daily life, in daily business. You can just transact normally. You can send SMS, top up your credit, and then through that behavior and that history, an algorithm can determine whether you have an ability to repay your loan or not. So it's an incredible development. So our objectives are really to reduce the amount of time and the cost for transaction, making sure that people are able to seize business opportunities that are economy of scales, efficiencies, that the more linkages between individuals, but also individuals and the government. Our theory of change is a kind of like a progressive, sequenced approach. Certainly because our strategy is based on technology, and of course, given the origin of the foundation, you can imagine why we are so focus on technology and why we are so oriented into technology. Once we have ascertained that the country has a good penetration of mobile devices, and there are situations where we are currently not active like countries like Ethiopia, simply because the connectivity is not there, the infrastructure is not there, so we're really looking forward for the country to reach a certain level in order to enter that country. Once that is established, we work on the regulatory and policy environment. So this is the first step of the ladder. Policy and regulation can really be a strong enabler for digital financial services, for financial inclusion, or a really huge bottleneck and prevent innovation and level playing field. While we work on the regulatory environment and policy environment, we also look at the payment infrastructure. So everybody, regardless the situation in terms of where you stand, whether you're poor, less poor, middle income, we all have the need to transact. We buy food, we pay for education, we pay for health services, so we need to transact. This is why we focus a lot on payment infrastructure, and there's a project called Level 1 project that the Gates Foundation has been working on for the past 2 years, really looking at how we can increase the efficiency in the payment infrastructure, reducing all the cost elements to the maximum. Really trying to understand where the industry needs to compete and where the industry needs to cooperate. So what kind of infrastructure could be developed in common, and then instead focusing more on competing on applications or account. Then moving forward, we look at creating a digital payment ecosystem. So as we are thinking about a society which is more digital and less cash intensive, we want to make sure that particularly poor customers have the ability to keep the currency in a digital format as long as possible. So we know, for example, the importance of government-to-people payment, so the ability to receive social subsidies in your wallet or in your bank account. But then if you have no opportunity to spend that digital currency, then you will cash out. And so what's the point? So the other part of the equation in this ecosystem is really making sure that the small shops, the merchant, accept digital payment solutions. And so they transition from cash into something which is much more sophisticated and much more traceable, efficient, and lean. So creating that ecosystem is really important. But being financially included doesn't mean being able to receive and send money or pay bills through digital devices or via cash. It's really the ability, as Leon was saying, to have access to a variety of financial services, insurance, savings, loans, credit, at the right time, at the right moment, affordable, and that really meets the needs and circumstances of the population we are targeting. So that's the end game for us, really creating an ecosystem where a variety of financial services are available. So what's happening since last year? So I had a similar graph last year, so for those who were here, I'm not trying to recycle too much the last presentation, I just trying to tweak it. But last year we reported 255 mobile deployments, of which 21 were active in terms of like scalable, more than 1 million registered account. This year we have, this year reported for the end of 2015, 271, and 30 active deployments in terms of like active in the sense like scalable, more than 1 million registered account. So this is a progress. So as you can see, the market is developing. There's growing interest, although there are significant issues why not all the 271 are scalable and not all 271 are profitable. What are the issues? Well, there are many. Regulation is certainly, as I said at the very beginning, a key component that we need to take into account. And this is my areas of intervention where I'm focusing on, particularly for my own position. Regulation means creating a level playing field, creating an environment that fosters innovation, promotes innovation, that allows competition. And we have a lot of issues in terms of market access. We have a number of new players coming in that are not necessarily financial institutions, but mobile network operators, aggregators, I mean, you know all of them. So how do we make sure that the existing regulation, which is highly biased toward banking, accept new players and new products? And how do we make sure that the regulators has the proper mindset to allow innovation and really perceive the new products and services for what they are in reality? So really having a functional approach rather than really thinking about labels or about the institution that is providing them. Customer. Of course, you can have an enabling regulation. You have the most amazing policy, but the customer doesn't use them. So the service could be there and access could be facilitated, but then there's no uptake. So we need to understand what the customer really needs and what they want, why they then sign up. So what are the cultural elements that are really preventing end users, particularly women, so there's a gender gap that we need to take into account, why they don't take advantage of this new technology. So what are the issues? Is it pricing, is it transparency, is the fear of being frauded and lose the money? So all of a sudden you need to understand that people are used to touch coins and notes, and all of a sudden that number becomes something on a display. So is this my money, and will I be able to get my money back? Agent. So the agent play a significant role in this ecosystem, because they are the one that are replacing the traditional brick and mortar agency and branches in the field. So they need to be reliable. So there needs to be proper KYC for the agent. They need to be trustable. They need to be able to explain to the customer what the product is. So there's a financial education role there as well. And it's very important that the agents are profitable, because otherwise they will just start the business and then move out to something else as soon as the business is not at their expectation. And the business model is very important. So how do we make sure that this is all profitable? Because clearly a role of foundation like the Gates Foundation is important to start things. But at the end, when grants are finished and when the project is exhausted, all these initiatives needs to be self-sustainable. And the importance of profitability is a key element here, particularly when we're thinking about a population which is transacting in small value and in high frequent volumes. So we have small sizes, like few cents, that are transferred or are used in these transactions very, very frequently. So if you think about the traditional banking system, this is why it's very difficult to make it cost efficient. So these are all issues that needs to be addressed. But there are opportunities, of course. So when we look at last year, what has happened in the last 12 months? Well, first of all, we have still a high and interesting political momentum here. In September 2015, the Sustainable Development Goals replaced the Millennium Development Goals. So we have now a new set of objectives from 2015 to 2030. And financial inclusion is one of them, and there are a number of sub-objectives and initiatives that really can be supporting this agenda. So having access to proper finance can help smallholder farmers, can help the gender gap, can help poverty alleviation. So there's a real important role for digital financial services in the SDG agenda. Then there's an increasing interest from the standard-setting bodies, and Thomas will talk about that later on. The PAFI report was adopted earlier this year. This is the payment aspect for financial inclusion, really looking at how payment system can be leveraged to promote financial access for the poor. And this is a report which I really recommend you to read, because it's superly well done, well written, and it was done in conjunction by the World Bank together with the CPMI, which is the Committee for Payment and Market Infrastructure within the Basel Committee. So great political momentum. At national level, you have an increasing number of countries looking at digital financial services and making digital financial services the core pillar of the national financial inclusion strategy. You have Uganda working on a new strategy, you have Indonesia, Bangladesh. So there's a great political momentum. We said growing number of deployment, we talked about that. Payment banks, why I mentioned that? Because this is getting a lot of attention, the Indian experience. So the ability to create institutions that are specialized and they don't intermediate funds, but they only take deposits and make payments. That it creates a new cluster of entities that have been copied in other countries, like in Colombia, where we have special entities. The name can change. You can talk about special purpose vehicle. The underlying idea is really to separate the mobile money business from the traditional credit lending. And so where there's no credit intermediation, there's no credit risk, there should be lower capital requirement and lower regulation for these entities, which is always done in the perspective of reducing cost. Growing investment in fintech, the whole half a day today will be about fintech, so I will not talk about that. But it's an important aspect of this ecosystem, how to leverage technology to create efficiency. And RegTech is the new kind of like terminology. InsurTech is another one that I heard recently. So there's plenty of tech. So we can have a competition about that. And interestingly, the falling price of smartphone. This is something that I found on the searching on the web. Some latest figures about last year, the penetration of smartphone in different countries, and I just picked up a few. And it's interesting to see the gender gap. You can see that the youth have increasing access to smartphones compared to those who are older than 35 years. So we never, for example, even in my team, we never focus too much on the youth. And I think that's probably something that we should start paying attention, because they are really on the front end of technology. But you can see there are interesting data, 22% in the Philippines, 35% in Vietnam or Mexico. So increasing penetration, although this is happening mainly in the urban areas. So in the rural and countryside, you still have a lot of feature phones, so the legacy of the old technology. So replacing a whole country will take still time. But it's coming up very, very quickly. And of course, that will create a new user experience. There will be new issues in terms of data privacy and other things that we will have to deal with, which is ensuring that we will have a job in the next years to come. So just to conclude, digital payment systems and the ubiquity of technology offers a huge opportunities for us to really serve the unbanked, create a new ecosystem, and the possibilities to reach billions of people in a scalable, efficient, and sustainable way going forward. Thank you very much.
Do you have a question? Do you have a question?
I don't know if you have any questions. No. One question, yeah.
If you guys could line up, we have 2 stand microphones. We could just form a line over here. That'd be great.
Thank you very much. My name's Richard Field. A question: are there studies, and is it clear that the move to this technology will eliminate or minimize corruption and fraud, or will it just shift it or centralize it?
Well, I don't know whether there are studies. Certainly, we know that in many countries, if you, for example, if you are an eligible household for rice subsidies and you're entitled to have 100, and these rice subsidies are paid in cash, you probably are going to receive 60. So we know that for sure that there's a lot of graft in the way. So instead, if you cut all the middlemen, then you directly reach the recipient. That's automatically allow you to reduce corruption. So I think there is some evidence. I'm not particularly aware of any study. I can make a quick survey for you if you're interested. But the Better Than Cash Alliance, for example, is doing a lot of research in this field, and this is an advocacy entity that is promoting the digitization of payment, particularly government-to-people payment. They did a diagnostic in different countries, and there are examples of the efficiencies and the savings that can be gained, like in Mexico, for example, all salaries have been digitized with the savings for the government up to $1.5 billion per year. So there are efficiency. In terms of corruption, I think there's proof. In terms of the size, I wouldn't able to tell you any figures, but there's evidence on that. One more question, yeah. And
David Garrity, I do consulting work with the World Bank, mostly in rural areas in sub-Saharan Africa. One of the things that you raised in your presentation is, the desire of trying to move towards more of a cashless society. Cash has significant risks and inefficiencies associated with it. Granted, there is a wide range of regulatory issues to be confronted, but in terms of the work that I've been doing, looking at financial inclusion in rural areas, this might be significantly advanced to the extent that prepaid airtime is considered possibly as a unit of exchange for settling transactions. Granted, the Gates Foundation, like the World Bank, has a wonderful convening authority. My own question to you is, what are your thoughts about this concept, airtime as a unit of exchange, And is it something that you think might be feasible to the extent of entering into dialogue with both political as well as financial authorities?
Well, without being an expert on that, I mean, I remember some internal conversation about using airtime for payments. And the risk there, I mean, one of the issues that certainly I heard in engaging with regulators is, do we have a risk of creating new money when we talk about mobile money? Now, the answer we always give is no, because it's, mobile money is like you give me a note of 10 and I give you 10 coins of $1 or 10 notes of $1. So I basically in exchange and anything is back in the bank. If you start instead transacting through airtime, then there might be a risk of money creation there, because I can say, well, now I have a promotion and I give you $5 of airtime for $3 that you pay. So if you start commingling things, there's a risk there that things might go in a different direction compared to what we want. So the separation of airtime on one wallet and real money in the other wallet, I think, is probably more advisable. Leon, the floor is yours.